All right, hello everyone, and welcome back to the Daily Show again. So let's get started. All right, so first you can see for the S&P 500, it actually made even a higher recent higher high again compared to over here, actually close to even slightly higher high. So which is why I mentioned if you have entered based on this trade, you would still be in this trade and your target profit over here remains valid, and then you would let the remainder of the profit continue to trail. All right. So if you look at the price action, why it still looks really bullish. There was a small little build up, closed nicely above. So I do expect the continuation of a bullish momentum to go up. So yep, that's the update. In terms of any market structure change, it remains the same. Bullish market structure, bullish trend, normal in terms of the trend, of the strength of the trend. You get 50, 200, and 150 still. Otherwise, that's it. Let's move over to Nasdaq. So as you can see, Nasdaq, even though there was some sort of rejection and some sort of retracement, things are getting back to normal again. And it has actually closed with an all-time high once more. And we're very much likely to going to retest this 11,000 on the index mark itself. So yeah, which is why this trailing stop loss remains a valid setup. It's still at the moment, if you look at the daily setup, okay, so you get this high, a lower high, a low. Okay, this is a high, a higher high, a low and a higher low, because this is 10602. This is 10626. So this is a higher low and higher high. So bullish market structure once more. Strong with 50, 150, and 200. So you must understand that a lot of times whereby if the whole market structure looks really bullish, even if you have a short-term bearish market structure, I will still lean towards the bullish momentum. Yep, so this is something to take note of, be it when you're trading or when you're investing as well. All right, let's move over to ASHR. So for ASHR, after a much sharper retracement, you do expect some kind of pullback, and indeed it did. And it looks like it's possibly going to consolidate over here. We could have further retracement. We could take a little look at the China market today to have a better understanding. But for now, if we just look at this price action itself, which is why I say this is really not for trading with the gap up and gap down. Right now, I'm looking for some sort of retracement to at least around this region, the 20 exponential moving average, or between the 0.236 and 0.382 Fibonacci retracement before entering for any long-term investment wise. All right, so that's the update. Market structure wise, you get a high, a higher high, a low, and a lower low. So you still get a neutral market structure, bullish in terms of trend, and looking to be strong with 50, 150, and 200. All right, and let's move over to KWEB. Okay, so for KWEB, similarly, you get a high, a lower high, a low, and a lower low, even though it bounced up a little bit, especially this 20 exponential moving average. Tendency for it to continue is actually there, especially now that it has broken this downward kind of momentum. And looks like the strength wise is looking there. There's a bullish green candle, supportive candlestick on the 20 exponential moving average. So things are looking good. If you enter KWEB, you could continue to add your position in. So if you're looking to do dollar cost averaging on a monthly basis, this would be a good area to add value. And otherwise, that's the update. So basically, you still get a bearish market structure, bullish in terms of trend and looking strong. And finally, let's move over to Bitcoin. So for Bitcoin wise, what you see over here is actually in terms of the day chart, where you get here is a high, a low, and a higher low. So because it actually closes with a higher low, it does actually give some sort of a consolidation, a neutral market structure, and potentially showing that this is indeed a supportive region. So you do get a neutral market structure, bullish and normal. Okay, but one thing to take note of is if you enter one, I'm not looking for long just yet, is because right now the price actually has ran up quite a bit today, but we have this 50 simple moving average over here, which could act as a potential resistance. Similarly, there was rejected once here. It could be rejected once more here as well. So I'm not looking to enter any long setup if you're looking at the daily chart itself. But looking at the 4-hourly chart, what you see here is basically there was signs of a bullish momentum building up with higher highs and higher lows generally. But if we look at the closest market structure, this would be the close of here, which is a high, a higher high, a low, and a higher low. So you do get the bullish market structure as well. And right now, price is close above it, so it has transited back to bullish, and it's still 50 or 200 followed by 50 and 150. So strength remains normal. So the false breakout wise, if you have entered over here, I will have closed it because any price above here, right, close above these 200 simple moving average will have been the last straw. So for price action trading, I will have taken the remainder, close out the remainder of the position. And as for potential new setup wise, it could be a very, because this is a very strong break above these 200 simple moving average, I do lean towards bullish momentum. But in order for me to enter the next bullish setup, I will look for some sort of consolidation pattern over here or some sort of pullback over here to find some support before entering a long when it breaks to even higher high. So yep, because this would be allows me to actually set a tighter stop loss, allowing me to have much greater risk to reward setup potential. So yes, even though you may say that why are you entering at a higher price, and say why not you enter here, why instead you actually break out over here, but the idea is that you want to increase or maximize your risk to reward. In order to do so, you have to have a tight enough stop loss, and a tight enough stop loss is only achievable if you can see some sort of consolidation or some sort of supportive region behind it. And yep, that's it. So for now, I would say that there is no setup in place. I lean towards long, but consolidation slash pullback needs to take place with 200. Yep. So if this 200 simple moving average does hold on the 4-hour chart, and some sort of retracement does to touch there specifically, but it will be great if it touches there, but otherwise you'll be able to sell along. So this setup is already invalidated and it's been closed. So you have taken profit here, close over here, either break even or a little bit of loss. So overall, you should still be making a little bit of profit from that trade. Otherwise, that's it for today. And I'll see you guys tomorrow. Take care. Bye-bye.